Okay, welcome back, everyone. I am doing a lesson series currently, and this is lesson number 3. Initially, we started off. Let me actually review last week's lesson. We talked about we first lesson was about candlesticks, and then we talked in last week's lesson about basically the important reversal candles that affect trends, okay, such as narrow body bars, which I like to call battle bars, because a narrow body is a small body, so the stock is not going anywhere with big tails, which means there's a fight, a battle going on. So we talked about narrow body bars. I told you to think of them as though, as a U-turn. When a car is trying to make a U-turn, it has to slow down a little bit to make the turn. But there's narrow body bars and there's narrow range bars. Narrow body are the ones with the small body and the wide range, or the normal range, which means it has topping or bottoming tails. We also talked about wide range bars, how wide range bars, just like wide range volume bars, act as they ignite new trends when they come at the beginning of a relatively quiet period, or they act as exhaustion, as a signal that the trend is over if they come after multiple bars down already. What else? We talked about topping tails, how they form and why topping tails are significant. Okay, we didn't really talk about the difference between this tail per se and that tail. There is a difference. We'll talk about that maybe in future sessions. We also talked about bottoming tails, how they signal the shift from selling to buying, and what bottoming tails actually really mean. And then we talked about range expansion tails. These are the large bottoming or topping tails, and I said those are the strongest sign that institutional money just got involved, that there was a big shift from selling to buying if it's a bottoming tail, or from buying to selling if it was a range expansion topping tail. Those are the strongest bars you can have. The only issue with them is the range is very wide, so your stop is usually big. So the ideal situation would be to get in while the stock is just forming the bottoming tail at the bottom. But how can you do that? Well, by going to the smaller time frame. How can you get in before the bottoming tail has finished forming? Then you can often see it happening on the smaller time frame. That is a discussion for another time. Again, we talked about wide range bars, igniting, ending. We talked about when the trend is also ending with, when there's small bars at the towards the end of the trend, what that means, which means continuation. It means a slowing in the momentum, but no panic, which means that and trends do continue, which means continuation lower. And today we're going to talk about reversals, pivots, and trends. Now, reversals actually form pivots, and pivots form trends. You see the relationship there? And in last week's lesson, we talked about reversal bars, right? We talked about reversal bars. Now we're going to talk about first the potency of the reversal. So when a stock reverses a prior direction or a prior bar, when it comes to reversals, and if you're trying to determine the potency of the reversal, the larger the reversal bar is in relationship to the prior bar, the more potent the reversal. That's number one. Number two, the level or depth of retracement into the prior candle increases the potency also. Okay, so again, the larger the bar and also the larger the retracement. For example, this was potent. Why? Because the green bar was much bigger than the red bar, but not only that, it also retraced more than 100%. So from here to there, that's 100%. From here to there, that's 150, 175%. So this was a potent reversal bar, very potent. In the second example, in the second circle here, not so potent because as the size of the green bar compared to the size of the red bar is not significant. The size of the green is only about 50% of the size of the red bar. But not only that, it also didn't retrace much. It didn't even retrace or reverse 50% of yesterday's bar. Now, could you get a small bar that's a little more potent? And the answer is absolutely. If this little bar, see it? If this little bar was here, would it be potent? Why or why not? Again, I am doing this lesson series for strategic day trader members as well as social media folks. So feel free to just type in your answer. The question is, would it be, we said if the green bar at the bottom, we said the green bar at the bottom would not have constituted a strong reversal. But what about at the top? Would it be considered a potent reversal? And the answer is, well, there's two things. One, the size of the bar isn't very big, so it does not qualify for the first condition. So the size of the bar, the larger the reversal bar in relationship to the prior bar, the more potent. So the bar is small, so not very potent, but notice the stock closed here and gapped up. So it actually retraced more than 100%, reversed more than 100% of the red bar's high, of the prior bar, which means that gets the check mark. The level of or depth of retracement into the prior candle increases the potency. Now there is another thing as to why it would be potent if it was at the top is because of the gap, and gaps trap people, meaning anybody that shorted here, that shorted, big money, small money, dumb money, smart money, whatever, every single person that shorted and stayed short into the close, the next day, now they're underwater. They're going to look to cover. Their covering should propel the stock higher. But that is a lesson for another day. It would be a lesson on gaps, and we're not trying to talk about gaps too much right now. It's all we talk about in the strategic day trader room, so we're not going to talk about that in too much detail. This was a potent reversal. Why? Because it meets both conditions. First, the size of the red bar was just as big as the green bar, but the retracement, there was a gap down. You see it? There was a gap down. So when you get a green candle, the stock basically means that the stock closed at the top of the green. When you get a red candle, it means the stock closed at the bottom of the green, red. Does that make sense? So stock closed here, opened here, and sold off. Every single person that bought it, the vast majority of people that bought it, stayed in it into the close. How do I know? Because there's no tail. It means they didn't sell it. They stayed in long. The next day are underwater. But also the retracement percentage was about 200% reversal of yesterday's bar. So the size of the red bar is significant compared to the green bar, but also the level or depth of retracement was 200%. So very potent. Here, not so potent because we got a gap up. So people actually were not trapped. The buyers, this stock got bought the previous day. The next day when it gapped up, I mean, people were probably selling it as a novice gap. So the size of the red bar compared to the green bar gets the check mark for the first condition, but it does not for the second one because we only retraced about 20% of yesterday's candle. So not a very potent reversal. Does that make sense? So far, I trust this is all making sense. Now, it's really important to understand reversals because it's how pivots form. And if you can analyze pivots, then you can analyze trends. And if you can analyze trends, hopefully you'll be able to also ride the trend and be able to figure out when to get in, when to get out. Does that make sense? And if you can do that, then you'll be a successful trader. It's as simple as that. At the bottom here, same thing. As the size and number of candles that make up a reversal increases, so does the potency. Okay? Small green candle, small red candle. Couple of guys playing with themselves. I mean, couple of buyers, couple of sellers, no big deal. It is only potent. These kind of bars are only potent when they come after a multi-bar sell-off at the bottom, because then you're basically getting the U-turn that I said. So if it comes after a multi-bar sell-off, those would be constitute narrow range bars, which are reversal bars once you break above the high of both bars. Or if it comes after a multi-bar rally at the top. Does that make sense? Otherwise, in and of themselves, these two bars are not very potent. In the second situation here, the red bar's size is twice as big as the green bar, so it gets the larger the reversal bar, it gets the first point, but it also retraced almost 100%. This bar retraced about, let's say, 75. This retraced 90% at least. So more potent for sure. In the third example, that's even more potent because the stock tried to go higher. A topping tail means it used to be a green bar and then it got slammed. So there's a failure there. Anytime you see a tail, a topping tail or a bottom, it means people got caught. That's what it means. Traders got caught. Why did they get caught? Because the topping tail forms really quickly in the same candle. If it formed slowly, then you'd see two red bars. Not as effective. Having two red bars here wouldn't be as effective as having a topping tail bar. So a topping tail bar does not give people the chance to get out. Okay? So that's why this was potent, but it also retraced more than 100% of yesterday's bar. This one was pretty bearish. I mean, just as bearish as the previous one, but a little bit more bearish, not because we have a tail, we don't have a tail, but because the size of the green bar that we're reversing was larger. So more people, so it's a bigger fight here we're talking about, a bigger battle. Bigger battles, those are the ones that decide the war, right? Small battles, they don't decide much. Okay, so that's why it's a big green bar met by even a bigger red bar. And in the third example, I mean in the last example here, we tried to go higher, failed, and then if you connect these, this is an even bigger red bar, and we retraced also at least 100%. So we tried to go higher and failed. This is basically a breakout failure. Check it out. See that? And then it's a breakout failure. So, and that's the breakout failure. So that's why that is actually the most potent of the last five. Okay, are there any questions on this? Are there any questions on this? Okay, question. Could this also be like a shakeout move? It starts, it could be how a shakeout move starts. Then we should get a shakeout and the stock then continues next. Yes, I mean that's basically how a shakeout move happens. But here's how it happens. You get, let's say the stock is basing, breaks down a little bit, and then it goes back up, and then breaks out. What was the play this afternoon? That was nice. It was the WBA, wasn't it? Check it out. See this? That little top and tail? That's a shakeout. Or, do you see this? That's a breakout failure. That's why I played it short. Now, when I played it short right here. Okay, that's a little breakout failure. When I saw this shakeout, didn't I send out an alert to add more to the position and lower the stop? I still know the numbers by heart. 55.40 by 55.61. See this? Under 55.40, stop over 55.61. So I added to the position. Does that make sense? So that's why. Now, this is just an illustration. These are candles that, they're not real candles, but they represent price action. It's the same stuff, guys. It's really the same stuff. Okay? So that was the WBA today. Okay. So I trust this is clear enough. Now, what makes a pivot? Does anybody know the answer to that question, by the way? What makes a pivot? Anyone? How do we get, this is called a low pivot, which is when we have, when the bulls basically take back the control, and that leads to an uptrend, right? That's a low pivot. And that's called a high pivot, or we just say pivot high, pivot low. A low pivot forms by having a higher low on either side of a candle. If you have a higher low on either side of a candle, you get a pivot. If you have a lower high on either side of a candle, you get a high pivot. Does that make sense? It's really simple. Trading is really simple. It's not easy because we're human beings with emotions, and we lose objectivity really quickly. If somebody were to walk into the room and just insult you, you immediately lose your objectivity. You lose your cool. And if you lose your cool in trading, you can't trade. Otherwise, it's simple. It's really easy. Okay, good. So a low pivot forms, we always get a low pivot when we have at least one higher low on either side of a candle. Okay, at least one higher low on either side of a candle. And a high pivot, a lower high on either side of a candle. Now, but how can you tell which pivots are good and which pivots aren't very good? Well, this is how you determine the potency of pivots. We look to the number of higher lows on each side of a pivot. So in this case, where's the pivot? I just want to point it out. That's a pivot because we have a higher low on either side. That's a pivot because, so there's two pivots here, 1 and 2. Okay. We look for so we look for the number of higher lows on each side. The more, the better. The number of higher highs on each side also. Higher highs meaning higher bars. We want the bar to also be higher, the high to be higher than the previous candle. Because sometimes you get a higher low, but you don't get a higher high. Meaning, what if this candle actually closed right here? Well, what if this candle right here, this red candle, closed, the high of it was here and the low was here? You would technically still have a pivot because you'd have a higher low, but you'd also have a lower high. So we like to have as many as possible higher lows on either side, and we like to have higher highs on each side. Okay? Now, the number of higher lows on the right side. Now, if I were to ask you, what side of the pivot is more important? The left side or the right side of the pivot? Anybody know? Whether it's a pivot high or pivot low doesn't matter. What side is more important? The left side or the right side? I'm already giving you the answer. I'm saying the right side or the right side, right? The right, because the right is what is what tells us who's in control or how strong the buyers are. Does that make sense? The left, the stock could have been falling apart. It doesn't tell you much about the strength of the bulls, which are causing the reversal. So the right side is actually more important. That's why we say the number of higher lows on the right side. It is important on both sides to have higher lows, but especially so on the right side, especially if they are consecutively higher. For example, these bars had higher lows, consecutive higher lows. Here, we had a higher low than the previous candle, but the next bar made a lower low. So no consecutive higher lows. Does that make sense? We didn't have any consecutive higher lows. So consecutive higher lows is important. And last but not least, the size of the green bar. The size of the green bars. So the bigger, the better. The bigger, the more, the more likely it's institutional money and not just a couple of guys playing with themselves. Does that make sense? And one more thing, which is the deeper the V, the more powerful it is, because it's like a rubber band. The more it's stretched, the more the stronger it's gonna snap back. The more stretched, the more it's gonna snap back. The harder the snap back. So the same here also. Now, is this all the information that you ever need to know about pivots? No, it's not. This just gives you an idea of this is just the basic stuff. Okay? There's more to it than this. What about if we have some kind of a failure pattern right here, like a breakdown failure? What if the pivot forms on high volume? What if the stock is actually extended away from the trend? The likelihood of a snapback is high, would be high. What if the first bar starting the move up was a wide range igniting bar, right? What if there is a bottoming tail at the bottom? Does that make sense? So these are all what we call amplifiers and make the pivot even stronger. But I'm not trying to overwhelm you here. I just want you to know the the basic stuff which you can build on by being part of the room, the strategic day trader room, by taking trading the pristine method class, right? You can build upon it. I'm not trying to teach you a 3-day class in 20 minutes. Question. So the end of the moves. Try when you type in your questions, guys. Please try to make sure that they're legible. So I'm not trying to figure out what you're saying. So just try to make sure that the questions are legible. So the end of the moves, if up or down, that forms points are stronger pivots. Let's see. Yeah, I mean towards the end of the trend, the end of the move, for sure. That's when you get the strong pivots. That's when you get the strong pivots. Actually, that's how trends end. That's how a trend, in this case, would have ended, is by getting a strong pivot. Okay, because otherwise the trend is your friend. Trends do continue. All right, I did have a lot more information for today, but since this is getting a little, I don't like to have the videos be too long, so we'll go ahead and stop right now for today. I hope you enjoyed today's lesson, and again, if you are interested, you can join the Strategic Day Trader for 30 days just for $49. And once you join, then I challenge you to find a better trading room. I challenge you to find a better trading room where you get tons of plays, really awesome plays. What were the plays that I called today? Anybody? What were the WBA in the afternoon? How about the morning APYX? How about that? Wasn't that a home run? 10-cent stop, huge drop, 50-cent drop, right? And I didn't catch it, but Vivo. Oh, I wish I did because I was stalking the WBA. That was very nice too. And that's it. That's about it. So you get a lot of professional plays, but you also get professional education from somebody who's shown you his statements, P&Ls, you name it. In fact, I am doing a webinar tomorrow, and I'm going to be showing every single account statement from my broker since I joined T3. How about that? You've probably gotten an invite for that webinar, so make sure to be there. But again, if you'd like to participate in the calls that I make and the plays that we take in the room, then 30 days for just $49. Thank you very much and have a good night. Take care, everybody.